Our national disregard for our government's debt and the pace at which we issue new money are reflections of our obsession with trying to get something for nothing, or to get something by taking something away from somebody else. These problems have become ticking bombs with an unknown timer. Attempts to paper over these problems, including the recent so-called new monetary theory, are wrong, and in some cases, plainly dishonest. You already understand this on some level because you know, as the saying goes, there ain't no such thing as a free lunch. But just in case you absolutely need to hear it from an economist, well, here you go, because you've come to take the gold pill. The two major parties in the media can no longer be expected to represent our interests. They control the information we receive in order to keep us comfortable with their profits and with their power. Comfort is not what I offer, only the truth, nothing more. Real quick, explain monetary theory in a nutshell. The basic idea is to issue more money into the economy in order to lower interest rates, in order to boost investing, borrowing, and spending. The problem is at some point, the money that goes into the economy will result in inflation. This is because there's more money relative to the amount of goods in the economy. That's what drives prices up. Once inflation takes hold, first of all, there's cost to inflation per se. But once inflation takes hold, people demand higher interest rates. Once you demand higher interest rates in order to accept each other's debt, it offsets the objective of the monetary policy, which was to lower interest rates in the first place. And so the whole thing is just a big waste of time, except for the fact that you get inflation, which has real costs. The idea behind the so-called new monetary theory is that you can issue more money into the economy and not get inflation. The money is just basically free. You get the advantage of boosting the economy and nothing goes wrong. The argument goes that you won't get inflation if there is slack in the economy, typically in the form of excess unemployment. So you can issue the money into the economy to boost production and employment without getting the inflation. The idea is that you just put in enough money into the economy to get it humming, to get it boosted, and then pull it out or stop putting more money into the economy just before you get inflation. There are two problems with this idea. First, you can't just turn off the money just in time because you really never know when it's going to be too late. You have to go close to the edge to get the effects that you want, but you never know when you're close to the edge. Secondly, even if you were to have some short-run success, you were able to put more money into the economy, you were able to boost employment, production, you didn't get any inflation in the short run, nonetheless, in the long run, eventually, that money will turn into inflation. You'll have more money in the economy relative to the amount of goods, and eventually that'll drive up prices. At that point, you'll want to pull out the money that you put in to keep inflation under control. That runs the risk of undermining everything that you just did, indeed reversing what you just did to get a boost in the economy. Proponents of new monetary theory argue that we have been putting a great deal of money into the economy and we haven't been getting inflation. It has been relatively costless. I would say that the costs that have really existed, we just have a hard time observing or admitting or recognizing. There has been some inflation. We don't know how low inflation would have been had we not putting more and more money into the economy. We also have a situation where the money that we put into the economy is feeding the appetite for others outside of the United States for dollars. We've been going through a relatively unstable and worrisome period in our economy and around the world the past few years, especially the past year. When this happens, Foreigners flock to the US dollar as a safe haven, even in the most critical situations, even in the most dire and the most worrisome. The US dollar is always the place where people go for their investments to gain some sense of stability. In this sense, when we issue more money into the economy, we're not taking up slack in our economy in the form of extra unemployment. We're taking up slack in the world economy in its appetite for dollars. We have a virtual monopoly in the issuance of the world's safest currency. And so, to a certain extent, we can issue more and more money. It's hard to know when we'll have issued too much in this sense, but we do know that we've been crowding out other currencies from the market. Foreign governments are the ones that are losing out when we exploit our advantage in world currency markets. Once again, I leave it to you to ponder the ethics of this situation. The so-called new monetary theory is not really new. 100 years ago, economists pushed a similar idea with a different name before we understood the science of money. Once it was recognized that you really can't get something for nothing, these ideas were left by the wayside. We learned more about the science of economics and how money operates around the world and through time. Nor is new monetary theory really a full-fledged theory. It's mostly just an idea. It makes no attempt to take into consideration the full effects of money. Nor is new monetary theory really, at its core, about money. It's about greed. It's about wishful thinking, the wishful thinking that comes from greed. The silliness behind the new monetary theory, which is merely an idea, of course, is reflected in the actuality of this silliness in the U.S. bond market. The U.S. government is, and has been for many years, issuing bonds to borrow money like there's no tomorrow, literally as though there were no tomorrow. The costs of this borrowing are borne by U.S. citizens. They fall on U.S. citizens in the form of future taxes to pay for either repayment or indefinite servicing of the interest on these bonds. Or these costs come in the form of inflation when we print money to pay for the bonds. Again, I leave it to you to wrestle with the ethics of the situation. Particularly consider that the cost of U.S. government borrowing largely falls on other people than those who benefit from the borrowing. The costs fall on young people, people in the future, people not even born yet. Milton Friedman once famously pointed out that the only way to limit the cost of government is to limit the expenditures that the government makes. In other words, once expenditures have been decided, so too have the costs. The only thing left to be determined is how the citizens will bear these costs. One way or another, these costs will be borne by people in the form of taxes to repay or service the interest on the debt or inflation, but the costs are not going to go away. 50 years ago, there was a similar push to try to convince nations around the world, including the United States, that bonds represent net wealth. In other words, the costs of the bonds, whether in the form of repayment or interest, were relatively small compared to the benefits of the money one could bring in by borrowing, by issuing the bonds. Bankers who had an interest in making these loans and by issuing these bonds were able to convince governments that borrowing was a good idea to finance big public works projects. In the case of nations like Brazil, for example, they were wrong, and spectacularly so. They were similarly wrong in places like Chile, in Argentina, in Greece, Russia. They were wrong in Poland, Venezuela, Uruguay, Paraguay, Panama, Peru. Nicaragua. They were wrong in Mexico in a big way. They were wrong in Jamaica, Honduras, Guatemala, El Salvador. They were wrong in Ecuador. Didn't work in Kenya. There were problems with the same idea elsewhere. Ghana, Gabon, Morocco, Nigeria, Bolivia, Costa Rica. There were problems in the Dominican Republic. You get the idea. The tricky thing about issuing too much debt is you can never really be certain when it's too much. You only find out when it's too late. You wake up one day, you have a crisis. Could be of a political nature, could be a military conflict type of crisis, could be a world health crisis, pandemic. And all of a sudden you find that investors are less enamored with your debt. They're less trusting of your ability or your political will to meet your obligations. They start demanding higher interest rates to accept your debt. And now it becomes even more difficult to meet your obligations, making it even more difficult for people to trust you, and you have a vicious downward spiral. In the next phase of your crisis, people become concerned that your government will be less able to participate in the economy in the same fashion that it always has, whatever that may be. They fear a recession. When people fear that you're going to go into a recession, they become less interested of your currency. Now, if they fear that you will issue more currency to try to get yourself out of the problem through monetary policy, they may expect inflation. They may expect that your currency is going to become worth less in the future than it is now. They become less interested in your currency, further driving down its value. When your currency diminishes in value, so too does your debt. Now, people who are willing to invest your borrowing through debt are demanding an even higher interest rate. And congratulations, you've now accelerated your downward spiral. We all hope that the U.S. government will go on forever. But if at some point in the future it does fall, this will be why. So issuing bonds and issuing money as though they were costless, as though there were no tomorrow. Is this more like believing the earth is flat? Is it more like bottling snake oil? Or is it more like trying to fraudulently sell a great big bridge? I'd like to think that it's a flat earth type of problem, that once people understand the science of economics and money, we'll sort of grow our way intellectually out of the problem. But there are so many people who still believe in the idea of getting something for nothing that I fear it's more like bottling snake oil. You kind of know it's not going to work, but it's worth a try, right? But alas, no, it's not worth a try. There are real costs to inflation, and there are real costs to debt crises. There are enough politicians out there trying to convince us they can give us things without there being a real cost in the future. Because of this, I think that this problem has a lot to do with, unfortunately, compromised ethics. And so in this sense, it feels a great deal more like the sale of a fraudulent bridge. The problem is real and difficult to work our way through politically. Unfortunately, politics has become a battleground. On one side are politicians and pundits, jurists and journalists, regulators and revisionists, who believe that they can better come up with solutions to your problems than you can yourself. On our side of this battle are things like science, history, people like you, people like me, and common sense. Thanks for helping me make this sense a little bit more common, and thanks for coming to take the gold pill. Comfort is not what I offer, only the truth, nothing more.